Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Welcome back to the Ask Ralph Show. Today, let's talk about the exciting form, the W-2 form. Yes, most of us have these if we do our taxes or if you take your taxes to someone to do them for you. I think it's really important that you understand what's going on with the W-2 form. And it's amazing to me how many people just don't have an idea of what's on there. And why is this important? Well, one of the things I will tell you is a lot of people that come in to get their taxes done with me don't even bother to open up the envelopes to look at their W-2. And the reason that's important, and this happened to my own son, your employers do make mistakes on these. In my son's case, it was his first job, and the employer put the wrong Social Security number on there. When I was doing his tax return, I said, son, this W-2 is wrong, and he hadn't even looked at it. So let's spend a few minutes talking about the components of the W-2 and what to look for. So first, when you get your W-2 form, the first thing you want to verify is that the pertinent baseline information in the spaces labeled with your letters, namely your Social Security number and both addresses, yours and the employer's, are correct. It's really important to make sure that your name is correct. Make sure that your Social Security number is correct. Make sure that your address is correct. Make sure your employer's address is correct. Now, if you work for a large employer, you might find that the address that's on there for the employer could be an address that doesn't, match up with where you actually work, but it might be their corporate headquarters. Once you've looked at that, make sure that your name is spelled correctly. Make sure that the Social Security number is complete and accurate. The next thing you want to draw your attention to are the numbered boxes that are in the upper right-hand corner labeled 1 to 6. Now, what you'll find is boxes 1, 3, and 5 list the collective income that is used as the baseline to apply the different taxes. So let's talk a little bit of time about what those are. Now, a lot of times when a client looks at those, they'll say to me, Ralph, it doesn't make any sense to me. Box 1 number is lower than box 3 number, and box 5 number is higher than both of them. Well, there are particular situations where this could happen. It's very possible that all three of these income boxes do not match your overall salary. That's not unusual, and here's why. So let's talk about a couple of the reasons why they wouldn't. First of all, box 1 represents your taxable income, which may be lower than your salary. Why is that? Well, not all of your salary is necessarily subject to tax. What am I talking about here? What I'm talking about here is if you contribute to a 401k program or a 403b program, that portion of your salary is tax deferred until the time you draw it out, which hopefully will be retirement. It's not considered taxable right now because when you take that money out, you're going to pay tax on it then. Another thing that could reduce your box 1 taxable income is if you have health insurance paid for through your company. Your part of the premium could be paid with what's called pre-tax dollars. You may have the term called flexible spending account or FSA. These could be used for healthcare costs and transportation reimbursements, for pre-tax funding, which would reduce your taxable income. Now, the other thing that could affect this is any non-taxable reimbursements like mileage costs that are applied to your paycheck. They wouldn't show up in your taxable income. Now, in summary, what we're talking about here in summary is box 1 excludes your elective contributions to retirement plans, pre-tax benefits, or payroll deductions. So if you look at box 1, that should not include those things which are pre-tax in nature. Now, boxes 3 and 5 will be different. Why is that? Well, box 3 houses what your Social Security income is based on, and box 5 is your Medicare. And the reason those are different is that both Social Security and Medicare taxes are calculated differently from federal taxes, and thresholds apply. So, for example, and I don't know a lot of people that hit these, but if you do hit these, first thing is Social Security taxes only apply to the first $127,200 of gross earnings. Therefore, if you're a low wage earner, box 3 is often higher than box 1. And for high wage earners, box 3 is often lower than box 1. So for example, let's say you're a person that makes $160,000 a year on your W-2. Well, what you're going to find is box 1, assuming you don't have any retirement plan or anything like that, will be that full salary. But box 3 will be $127,200 because that's the cap. Once you hit that, your employer will no longer collect Social Security from your paycheck. A lot of my clients who in the high income thresholds, will tell me, hey, it's great. I get to October, November, I sort of get a bonus because they're not taking out Social Security tax. Now, Income for Medicare taxes, box 5, generally includes taxable benefits and does not include pre-tax deductions, nor does this income have a cap like Social Security. So your Medicare could basically be the total of your wages, and it wouldn't include your deductions for retirement plans or for FSA. Now, another area that you want to look at, especially if you're in the hospitality industry, are your tips and allocated tips. They're found in boxes 7 and 8. And it's really important, these are your cash tips for servers, that you take a look at these, because these are considered part of your taxable wages. So make sure that's correct. And remember, if you didn't report tips to your employer, you're still obligated to report them to the IRS. Now, box 10. Now, a lot of people miss this one if they do their own taxes. Box 10 is where your employer puts any benefits paid to you under dependent care assistance up to $5,000. And the reason that's important is when you're doing your tax return, if you're doing it on your own, you need to make sure that you list that on the tax return, because those will reduce your potential child care credit, because you've already gotten those monies tax-free. Now, box 12 and 13 are probably the most confusing mix of codes for a lot of people. If you're interested in the specific codes, you can check out the IRS website, but you'll see like a code C. Code C has to do with earnings or imputed income for life insurance. Code D is generally for retirement plan, and code DD is generally the cost of insurance that your employer provides. Box 14 is usually the catch-all. It's like the junk drawer in our kitchens where you put anything that doesn't fit elsewhere on the W-2. Box 15 through 20 cover your state and local tax obligations and the corresponding income. And that's an area you want to look at too. Make sure that the correct state is there. If you work in a city, make sure that the city is listed. If you have any local taxes, a lot of my clients in Pennsylvania may have township taxes. Make sure they're on there. And while I'm talking about that, if you live in a city, but you may not work in the city, make sure that either your employer is withholding city tax or you're going to file a return at the end of the year. So what happens if you find a mistake on your W-2? Well, the first thing you want to do is review it. And then once you review it and find a mistake, bring it to the attention of your employer right away. They are obligated to issue you a corrected W-2. If for some reason they don't do that, you can contact the IRS and they will contact the employer on your behalf. Now, should your employer fail to get you a corrected W-2, or if you don't get a W-2, and I've seen this sometimes when a business closes, what are you supposed to do? Well, what the IRS has is Form 4852, where you can estimate the information that should have been used on the W-2 form. The best thing you do is have your last pay stub, and most of the relevant information should be there. So the bottom line is this, don't just take your W-2 for granted. Again, when you're going to see your tax preparer or your accountant, or if you're doing it yourself, as soon as you get that envelope from your employer in January, make sure you open it up. Make sure you check the information. A lot of times I'll tell clients to pull out their last pay stub and make sure that the pay stub information matches on the W-2. All of these things will help you to stay out of trouble when it comes to filing your taxes. So I hope this is really helpful in our exposition about the W-2 form.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware, and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.